Okay, welcome to our talk. Um, let's look at our calendar for this week. We have a lot of earnings that came out, a lot of tech earnings. We had Tesla, Microsoft, Google. We had Google. They 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 came out with good earnings, but they were not perfect. Some of their YouTube revenue wasn't up to what people were expecting. So it went down, and we're going to go over Google a little bit later on. So we're actually at a spot in our market timing where this is like the perfect time to buy. We have all the stochastics, almost every index kind of lining up. So you can see that the S&P is trading at its 50-day moving average. And so there's a couple things coming together here. We're at the bottom of this trend line, almost exactly to the penny. And we're at the 50-day moving average. So that's a lot of support. And so we have a 200-day moving average right here, which is 496 in the S&P. That's the next level to drop to if we go down any further. But seems like we have a sentiment today in the stock market where we're going to we had a good inflation report. We had I think it's a CPE report that came out today that was as expected. So what that means is the Fed is going to reduce the rates maybe a couple times this year. That makes the borrowing costs for stocks lower. So a lot of the small caps, a lot of the stocks that require borrowing money, they are doing well today. For instance, the biotechs are doing well. We have because the interest rates should be going down according to this. We have home builders doing well. So interest rates have a lot to do with what people are willing to pay in the stock market. Let's look again at okay, let's look at our stochastics. We're oversold, and we're when it gets to 20 or below, that is oversold, and we're at the bottom of our channel. So um, that's a good indication that we're going to hold right here. Let's look at some more of the ETFs. We have a QQQ, which is the tech ETF, and it's at the bottom of its trading range, and it's totally oversold. So we had um, we had like a sell-off after earnings this week. A lot of big tech stocks sold off. We had a rotation out of the big tech stocks into small caps and other parts of the market. But you see that we have the moving average, which is the 50-day, 100-day moving average, and we have the 200-day moving average, which we're not hitting, and we're at the bottom of its range in the QQQ. So that is a good layer of support right there. Let's look at some more things. The defense, it's actually no, it's overbought. Let's look at gold. Gold, it's it's 75% sold. When it gets down a little bit more, it'll be totally sold, oversold. You can see XLY. This is consumer discretionary. Is at the bottom of its channel, and it's oversold. So you see, you can see that the XLC, this is the communication sector with stocks like Google and Facebook. Um, it's totally oversold, and it broke its trend line just a little bit. Let's see if today's action allows it to go back into this channel. And what else we have here? So these are these sectors are not oversold. So this one's oversold. EWZ. We have uranium. It's starting a downtrend. It's oversold. All right, that was good. That was a good thing to go over. Okay, let's look at our calendar. Okay, we have earnings coming out this week and next week. And we're going to have some more of the prominent stocks like Apple come out with earnings next Thursday. We have Eli Lilly coming out in 2 weeks, and then we have NVIDIA at the end of August. So August, September are not very good months. September is always bad. So let's look at so we can see we're going into August now. August traditionally is not a great month, and the seasonality for September is bad also. Okay, so we're not expecting much through September. All right, so let's look at some of our talking points. The U.S. Treasuries. Well, after this was last night, but after today, they're basically flat, down a little bit. So that's positive for the stock market. Let's look at what the 10-year is doing today. We had the this inflation reading, the CPE came out today, and the first thing I looked at was the 10-year, and you can see that this went down a lot. 4.048 is a good percentage, and that is helping the stocks go up today because that makes borrowing costs lower as the treasury goes down. Also, what's happening right now, as we know, the interest rates are going to go down, the treasury yield. We see a lot of high yielding entities, securities going up because it's going to be hard to get yield in 6 to 12 months. And so people are piling into those. So let's look at some more of our talking points. Okay, so we have, let me see. Okay, let's look at this. Okay, this is percentage of stocks above the 50-day moving average, 62. Oh no, it's 80. Right, wait, what is it right now? It's 76 right now. So that's pretty good. We have fear in the market. We have the catalyst for market to go down. We're earmarking possible Trump talking the market around. We have earnings that are not up to what is expected. Earnings estimates going down or flat. We have U.S. Treasury yields possibly going up. These are all potential things that would make the stock market go down. Right now, we're having good earnings. So right now, that's more important than anything else. Okay, so what's been happening this week is we've had all the sectors that have done bad last year do better this week. So healthcare, telecom, financials, energy, utilities, biotech are all doing better this week. And the tech has done worse. Actually, tech lost about 5% this week. So let's look at our S&P. We have a oversold condition. We have 27 in our stochastics. That's pretty low. So that means people are washed out and they're selling and they're afraid. And we're at the support of this channel, and we're holding a moving average. I think it's a 100-day moving average here. So that's all very positive. And we bounced today, which is a good indication that this is going to we're going up in this jagged pattern here. Okay, and let's look at the 10-year treasury. We were going down, we were going up this week. So as these let me see, we actually went down in in the 10-year this week, and and the stock market went down with it. So that was a little strange, but um, we usually have an inverse correlation. But let's see what's out. But today we're actually the stock market's going up as the yields are going down, so that's continuing that trend. Um, all of our variables that we're following, price of oil, um, it's down a little bit. So the price of oil, it goes down when there's a weak global economy. So if China isn't buying a lot of oil and maybe the United States doesn't have as much economic activity, then there's less demand. So the price of oil goes down. And so right now it's going down. It's showing a possible weakness to the economy, or that supply is being disrupted in some way, or people are increasing production. Let's look at the inflation. That isn't changing yet. It's around 3%. Dollar index isn't changing. And gold is down 3%. All right, so let's look at okay, so we're actually in an uptrend with the dollar. So the dollar is getting appreciating. Let's look at the fear and greed index. We're finally at fear. So our translation when we have the greed and fear is when we're fearful, start looking for things to buy. And Jim Cramer says whenever you have extreme fear, that's time to hold your nose and buy, or don't sell what you have. So right now we have a position where we have stochastics telling us it's time to buy, and like almost every one of these ETFs and stocks are oversold. So let's look at we see Google is totally oversold. We see Altria, it actually is in an uptrend. This example of a high dividend stock. All right, Amazon is oversold. You can see that it's at the bottom of this sideways pattern now. It seems like it broke out of this uptrend that's been going through for a while, and it could be consolidating into this sideways for the summer. We don't know. We'll see how that turns out. Apple is actually uh, oversold. It's in this little uptrend here, and you can see that it's below 20 in the stochastics, which is oversold. So we have a oversold, and we have fear. That's the indication that we should start looking for things to buy. All right. Okay, we have the AAII survey. They're still bullish, so that doesn't tell us anything right now. All right, so okay, the VIX is getting higher. So as people are in the stock market are more fearful, the VIX goes higher. So we are getting more fearful according to the VIX. And right now, I would say our emotional gauge, we have a lot of denial. So if we see this investor sentiment survey is bullish, that is like denial. We've had a little stock market going down this week. And so I guess if we had capitulation, then those people at the AAII survey would be fearful and bearish. Right now, people are still in denial and they're assuming that it'll go back to normal. Okay, the things that could lead to a crash, we have earnings reports do not meet expectations, and possible Trump words out of his mouth. All right, so let's look at, okay, so the worst at first. This is playing out a little bit this week. We can see that the ones that did the worst last year are finally starting to catch up. You can see that you have utilities up 11%, staples up 9, energy up 10, real estate financials up 14%. So And all the IT related ETFs went down. So this went down like 5 or 8% or more this week. So let me see. So we're still watching, these out of favor sectors from last year. One thing these have in common is they pay a high dividend. You can see that utilities pay a high dividend. Healthcare usually have dividends. Consumer staples, and they're going to be more desired as interest rates go down. You're going to want a yield, and it's going to be really hard to get a yield going forward. So that's why you're going to see stocks like Altria, AT&T, ones that yield 8-10% in high demand right now. All right, so let's look at some of the sectors going up and down today. Okay, so we see, okay, we had that hint from the Fed. No, we had a CPE report come out that's saying we're probably going to reduce interest rates. So that helps the home builders because that lowers the monthly payment for mortgages. So we have the home builders as the top performers. We have telecoms because they pay a yield. So they pay like 5 or 10%. And it's going to be hard. That's going to be in high demand as interest rates go down. Semiconductors are doing good today. We had an oversold condition in the QQQ and a lot of the tech stocks. And with this CPE news with inflation, that helped the semiconductors recover from their losses earlier this week. And let me see. So we have technology, we have materials. Let's look at some of the worst performing stocks, ETFs. Gas, energy, biotech. Okay, but they're all every sector is up today. All right, so let's look at some of the market, the stocks going up and down. We see 3M had good earnings. We had Bristol Myers Squibb having good earnings. So we see this rotation into like healthcare, high dividend paying stocks. Bristol Myers pays like a 7% dividend. All right, the ones doing the worst are Chipotle, we have Paramount, Dexcom. Okay, so Dexcom, they're in competition with Eli Lilly and a couple other big companies that might be taking some of their business away from them. So I think they might have came out with earnings. Biogen, I don't know anything about these, why these would be down. Okay, I can't have anything to say about those. Let's look at what's going up and down in the NASDAQ. We see a lot of semiconductor stocks. Supermicro, we have Meta. Okay, a lot of AI related companies that sold off earlier this week are now recovering. And okay. All right, so let's look at some more of our talking points. All right, let's revisit Dan Niles' picks from the beginning of the year. We're starting to see XBI, the ETF for biotech, starting to outperform. Right. So the XBI is actually comprised of stocks that need to borrow money in order to survive. So as interest rates go down, XBI is going to be like the small cap stocks, and they'll benefit from lower borrowing costs. We have Amazon and Meta. They were up much more than they are now. They were up 40% earlier this year, but now they're up 18 and 28%. So that the only one that is still not performing well is KWEB, which is the Chinese tech ETF. All right. So we have a story here from uh, a guy named Mark Spitznagel. He actually runs a fund that's a black swan fund. In other words, um, it only does good whenever there is a black swan situation where the stock market crashes. He says that we're nearing a peak in the greatest bubble. So I highlighted some of the important things that he's saying here. He said we have a potential of losing half or more of the value in the stock market. So he isn't predicting when it's going to crash, but um, he hedges against that. So that's pretty scary. And let me see. So he says that the amount of money, the public indebtedness, and the valuations make um, a rescue hard to pull off. So in other words, we've already threw the kitchen sink at the problems we in the pandemic and during the financial crisis. So we don't have a whole lot we can do if we go into a recession and the stock market needs some help from the Federal Reserve. So so he's saying that we risk we risk going into recession, and with the recession, you have we're going to have problems with the treasuries where they're going to be going higher. So I haven't seen any of this. We're going to keep our eyes on these things and see if these come to fruition. Um, but I guess they say that a broken clock is right twice a day. So there's a lot of people that have been calling for a crash, for the past 50 years. And yeah, it does happen like maybe once every 5 years or 10 years, but a lot of times it recovers right away. So you can't really do your investing in fear. Okay, so let's look at some of the earnings that came out this week. We had Google, Tesla, and Visa come out on Tuesday, and we're also following Texas Instruments. Visa disappointed in their volume. Tesla, they disappointed also. In They're actually not growing. Um, and Google, they came out with better than expected earnings, but the people that were selling the stock were nitpicking and said that there's certain YouTube um, monetization that wasn't so great. But for me, as a Google investor, I see they're still growing 13 or 14%. So um, that doesn't that doesn't tell me it's time to sell. We had Waste Management report on Wednesday. AbbVie had a very good report on Thursday. We're following that stock. And that's that. And we had 3M report. They had a really good report. That's why they're going up today. We're also following Colgate. They had a really good earnings report. Um, and they've gone up recently. All right, that was good exercise. Um, I picked out a couple interesting charts to look at. One is the XLC, the communication sector. This is composed of like Google and a lot of communicate like Google, uh, Facebook, or Meta, a lot of the big tech companies. And you can see it's oversold, and we're at the bottom of our trend line, and it just barely, just barely went to the 50-day moving average. So let's see, it's oversold, and there's a good chance it'll go back up to here if we continue to get good earnings reports. Another one is Google. You can see that we had this uptrend for at least since February. But we have a situation where we corrected to like 10% this week. That's a pretty big correction. Um, but it was a correction that their earnings report wasn't perfect. They still posted 14% growth of their earnings, which is what I'm looking at. I'm just concerned that they're continuing to grow at 14% year over year, and I'm not too concerned about that their volumes for YouTube are down a little bit. So they're oversold, Google, and it looks like it could start trading in this range again. It broke out just a little bit in this uptrend, but it seems like we have this sideways pattern. Um, so if we follow that, it could go the whole way down to its 200-day moving average, which is right here. And then it'll be bouncing around in this channel. So let's look at Amazon. Amazon was in an uptrend for at least a year now, since October. And we see it broke out of its upward trajectory and into a sideways. Looks like it's a sideways pattern now. That's very interesting. We'll keep our eyes on that one. Okay, so we had a situation where we had some competing weight loss drugs come out with some reports. So we had two companies, Roche and Viking, announcing experimental drugs that are looking pretty good in clinical trials. And so Eli Lilly and Novo Nordisk went down because of that. So, but the interesting thing about Eli Lilly and Novo Nordisk is they have first mover advantage. So they are um, pioneers, and it's going to be a while before these get through their trials. And by that time, you have name brand recognition, you have larger adoption. So I guess the good thing about these new weight loss solutions is they are pill oriented. So this Viking one is you take pills, which you don't have to have injections, which is a bonus, I think. Okay, let's look at Viking Therapeutics. Their stock was like in like a penny stock for the longest time, and all of a sudden they're getting interest because they possibly have this weight loss solution. So when we look at the fundamentals of Viking, we have a lot of missing pieces. All these profitability, profit margin, return on equity, they're all missing. So, and we look at their Viking Therapeutics earnings estimates going forward. We see a lot of negatives. This is not very positive. So we with Viking Therapeutics, you risk the company going out of business if they can't come up with, a good um, trials for its weight loss drugs and its drugs in its pipeline. So so I try to stay away from stocks that have negative earnings. Um, but if you do buy this, you're just basically taking a gamble that they're going to go to profitability once their drugs do come out and they're successful. Um, but we'll see what happens. We'll keep our eyes on this Viking Therapeutics. Um, okay, so we had another article came out about OpenAI. They announced Search GPT in challenge to Google's search dominance. There have been people for 20 years saying that Google is going to have competition. They still have 90%, 91% search percentage in the world. So that's like a monopoly. And this is possibly a competitor. We don't know. Right now it's in beta. They don't even allow everyone to try it. They're just allowing a handful of people to try it out. So we don't even know if this works. And if they do come out with something that's successful, I'm sure Google will have something uh, copycat that's related to that, that's similar. Um, but they had great earnings that came out, and their cloud business is gaining momentum. And but the two bad things about the report for Alphabet is they had more expenses for AI. They're basically their attitude is it's better to spend now um, than underspend and then be behind in AI. So they're spending very heavily in AI, and the stock market didn't appreciate that at all, and it went down. But that's good for NVIDIA. We have a lot of indications that NVIDIA is getting a lot of orders from these big customers. So any news article that comes out, you have to know, what stocks it affects. And right now that affects NVIDIA. Um, let me see. So YouTube ad revenue fell short, but they're still growing at 14%. Let's look at their fundamentals. Um, we see the annual earnings estimates, they're still growing around 13% a year. So for me, it's a long-term holder. I bought this in 2008, and um, as a long-term holder, I see that they're still growing, their earnings at 13%, which is pretty amazing for a big company. And but their PE is 22 right now. Their forward PE is 22. So if they're growing at 13%, they're 1.7 times overvalued. So if you divide 169, the current price, by 1.7, that's the price that it might go down to in a major sell-off. But let's do that little exercise. Okay, so we do 169 divided by 1.7. Okay, so $100 a share is basically where their fair value is. For me, as a long-term holder, it's worth a lot more than $100 a share, having something that grows consistently at 14%. But right now it's out of favor. And you can see from the stochastics charts, let's look at Google. Okay, let's look at Google. All right, so we have, okay, this is the 200-day moving average. It seems like um, we're establishing a new um, channel to go through, not the blue channel, but it seems like we're going through this black channel. So we could go as low as 145, in this new channel, if we sell off in the middle of summer, which we could do. I don't know, but I'm still holding the stock because it's a very consistent, one of the most consistent stocks I can imagine. All right, so if you look at the Google's numbers, we can see that their market cap 2 trillion, forward PE is 22, profitability is 26. That's double the 13 that we're looking for. Return on equity isn't visible right now. I'm not sure why, but it's always been high. And that is that is basically what I had to say for today. So I hope you enjoyed that talk. I hope you have a good week of investing. Um, we can see that the 10-year treasury is down more. And it seems like as this 10-year treasury goes down, um, the Fed is um, forced basically to catch up with this and to cut rates. So our formula of U.S. Treasury yield going down, stock market going up, seems to be holding up. Let's look at what's happening now. Just one last thing. Okay, seems like we're doing pretty good in the stock market. All right. Well, I think that's it. That's the maximum I can say. Have a good investing week, and I'll see you next time.